Joining me is Isabella Chase, Head of Policy for EMEA at TRM Labs. Isabella, welcome to Wall Street to MENA.
Thank you. It is great to be here.
Now, 5 regulators for one industry. Do you think this is a smart specialization in the UAE or just 5 headaches for the industry instead of just one?
It's a great question, but I think I would land on the side of smart specialization. I think the model that we see in the UAE is actually really one of having deep expertise across a really wide range of supervisory jurisdictions and mandates. And I think that's really allowing the UAE to build a very interesting and active crypto community. I also think that the collaboration between those 5 regulators and the industry, led through associations like the MENA Fintech Association, is a really good example of taking what could be a complex framework and really making it work for the community, which is, as you know, really maturing at pace.
Yeah. So, Isabella, the DFSA just handed firms the job of policing their own tokens. Does that raise the bar or just pass the risk down the chain?
I would say that I think it really just reflects reality. The token space is evolving so quickly at the moment. And I think what regulators are realizing is that list-based approval regimes will not be able to keep up with that pace. And so what I think the DFSA is really saying is, your tokens, your customers, and it's going to be really up to you to own that risk management. So I would say it's probably a higher bar, not a lower one. And more broadly, looking at token management and ecosystem monitoring, this is a challenge that regulators across the world are currently grappling with. And I actually think the DFSA is taking a very proactive approach that many regulators will be watching and will be wanting to learn from in the future.
Now, 1 billion dirhams in fines for projects. Now, that's a really big number. Is that a real threat or just a scary number on paper?
It's a good question. I think it will be really interesting to see how the market evolves after the 16th of September when the new law comes in. I think it's
Yeah.
important to think about the wider context. We see many significant crypto markets now shifting from eras of implementation and licensing now to much broader enforcement. Just last month, Europe had the end of its grace period for MiCA, and now will also be entering into this period of enforcement. Now, for supervisors, that requires different tooling. It requires different skill sets. So I think those will be the factors that will tell us, is this just on paper or is it a real threat? I think the UAE supervisors are very well resourced. And so although the expansion of the remit is considerable, I think that they will be in a good position to now enforce the regime and ensure that market participants are meeting the standards that they need to.
Yeah, definitely. So, Isabella, you're specialized also in financial crimes as well, and this is what I want to get your thoughts on now, as we're seeing the UAE scales as a stablecoin and payments hub. What are the financial crime risks regulators and banks also should be aware of?
Yes. I mean, I think this is such an important part of the digital asset adoption story. If we want to have competitive markets, those markets have to have a high level of integrity, and being able to control the financial crime risk is crucial to that. At TRM, we publish an annual report called the Crypto Crime Report that looks at exactly those risks and what regulators should be thinking about. I mean, last year we saw $158 billion of illicit activity, which was up 145% year on year. Although that, in perspective of total crypto volume is still, we think is around 1.2% of total volume. I think that stablecoins are playing a really increasingly interesting role in that picture. Last year, we saw 95% of inflows to all sanctioned entities and jurisdictions coming from stablecoins. And so that's a real risk that supervisors need to be alive to. I think what we see across the whole ecosystem is that when you have unauthorized or poorly regulated firms or service providers, they are the ones that are allowing risk into the system. And so the priority for supervisors needs to be ensuring that they're cracking down on unauthorized businesses. And I actually think this is something we've seen the UAE be particularly proactive on and done a really good job of ensuring that the best supervised service providers are operating. And that is what we see with the new law from the CBUAE.
Mhm. Now, also looking at the rule book, the CBUAE, of course, rule book here, algorithmic and privacy tokens are banned in UAE. Why is that? Is that a safety move?
I think, historically, privacy tokens and algorithmic mechanisms have carried a lot of risk, whether that be from a financial crime perspective or from a consumer protection and markets perspective. I think jurisdictions can make their own choices on what they choose to prohibit within their markets. But I think it's really important that as they do so, they don't then ignore that risk going forward. And as the Financial Action Task Force says, continue to monitor the risk, review those bans on an ongoing basis, and ensure that they are still appropriate for what they are trying to achieve.
Mhm. Now, 5 frameworks moving at once. Are they actually in sync now?
It's a great question. Ensuring coordination across those 5 entities is always going to be difficult. But I would say that the UAE has a lot of experience that it can draw on from the traditional sectors, which have had multiple regulators for many, many years. I think that the fact that you have VARA, the specialist, the real center of excellence for digital assets, is a huge bonus because it provides a supervisor that can sort of anchor expertise, share knowledge across the 5. And I think what you see, in fact, is more collaboration and working together, which is a really positive thing.
Thank you so much, Isabella Chase, Head of Policy for EMEA at DRM Labs. Thank you.